Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 25th of February 2023 and we're publishing our gold and silver weekly update for the week ending the 24th of February. Last week we saw gold and silver prices fall again, but for good reason. What is that reason? Let's take a look. Gold fell $32 last week, falling from $1,843 to $1,811, having hit a high of $1,847 and a low of $1,809, a fall of 1.7%, following the previous week's fall of 1.2%. In sterling terms, it finished the week at £1,517, that's down £14, and in euros it closed at €1,718, that's down €6. Now silver performed far worse. It actually fell almost $1, not quite, 96 cents, falling from $21.74 to $20.78, having been as high as $22.25 but as low as $20.75, a fall of 4.4%, and that's now 6 consecutive weeks of price falls for silver. In sterling terms, it closed at £17.41, that's down 67 pence. And in euros it closed at 19.73 euros, that's down 0.64 euros. The effect of these falls has meant that the gold to silver ratio actually rose from 84.8 to 1 to 87.2 to 1. Now the difference between gold's high and low was $38 and the difference between silver's high and low was $1.50. Now we predicted last week that we forecast gold to trade between 1800 and 1900, which it did. And we stated that we thought silver would trade between $21 and $22.60 for the main part, with $20.50 to $23 as outliers. And again, this is what occurred. Now, before we delve deeper into what happened, let's take a look at other financials. Bitcoin stands at $22,990. That's down $1,500 on the week, 1,573. Equities were also lower. The Dow Jones closed on Friday at 32,817. That's down over 1,000 points, 1,009. The S&P 500 closed at 3,970. That's down 109 points. And the Nasdaq Composite closed at 11,394. That's down 393 points on the week. And the Nasdaq falling by quite so much is, in our view, what's affected cryptos equally as badly. Oils closed virtually unchanged, despite the fact, we'll find out in a moment, the dollar value rose. Brent crude closed at $83.16, that's just up 16 cents, and WTI crude closed at $76.32, that's down 2 cents. The dollar index stands at 105.21, and that's up 1.35 points on the week, quite a significant rise. Now last week we stated we should note the flash PMIs on Tuesday, but the Fed's minutes on Wednesday and the Friday's PCE figures were far more important and could have the greatest effect on the market. This undoubtedly was the case when we saw both gold and silver plunge late on Thursday and into Friday, continuing the descent almost until the end of business, and equity markets also took a significant hit. Why? Because the PCE index for January came in at 0.6%, compared with 0.2% rise in December. And the core PCE figures came in at 0.6% compared with 0.4%, and the PCE year over year came in at 5.4% compared with 5.3%. So much for inflation or PCE going down. Now, all this at a time when the government and central bank began to think that inflation was beaten. The rise in January was the largest rise in 7 months. Chief Economist Bill Adams of Comerica, commenting on the report, stated, quote, "This report makes the Fed more likely to keep interest rates higher for longer. The stickier inflation is in early 2023, the more the Fed will push down on the brakes, and the weaker the economy will be in 2024, which in itself does not augur well for silver, bear that in mind." We went into some detail on CPI and PCE in our video last weekend, and we place a link below for those who've not heard it. This coming week we have some important data, but not earth-shattering. But the jobs report the week after will have more influence, as we have the next FOMC interest rate decision on the 22nd of March. So on Tuesday we have consumer confidence figures for February, Wednesday the ISM manufacturing index, and also auto sales for February, and on Friday we have the ISM services index for February. If these are positive figures, it's not going to augur too well. Friday's figures, though, the PCE clearly resulted in a gain for the US dollar and US Treasury yields, and of course proved detrimental to equities and the precious metals market. Whereas most bets were on the Fed raising rates in March by 0.25% or 25 basis points, there is an increasing view they may rise by 50 basis points. Now we're withholding judgment until we see the non-farm payrolls the week following this coming week. As we mentioned last week, gold has some reasonable support at $1,800, and should this break, we could see gold quickly fall towards, not necessarily hit, but certainly fall towards 1750, which is where the 61.8% Fibonacci level rests, and where most technical traders will be focusing. We are expecting, though, gold to test that level within the next 2 weeks, especially if the non-farm payrolls are positive again. Silver also fell, but much harder. It cut through the 50% Fibonacci level, and technical traders are expecting it, like gold, to fall to or close to the 61.8%, which stands currently at $20.24. With silver now resting at $20.78, and we can expect some follow-through in the decline from this week into next week, $20.24 is a distinct possibility. The job figures the following week will either give precious metals a reprieve or force them down further. It's all a dollar play for now, and the effectiveness of the Fed to deal with inflation. We have higher interest rates ahead, and the apparent robustness of the economy suggests it has further to go with regard to raising rates. So where do we see precious metals heading this coming week? Well, we see gold trading broadly between 1750 and 1875, with 1725 to 1900 as outliers, though we are anticipating gold to trade towards the lower end of the scale rather than the higher end. Silver we can envisage trading between $20.25 and $21.75 for the main part, with 1950 to 22 as potential outliers. What do you think? Please do share your thoughts. Meanwhile, if you haven't done so, subscribe to the channel, press the bell sign, so obviously you're notified of our videos as and when they're published. And it remains to be said that we wish you an enjoyable, safe, and healthy weekend, and a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.